Present. Let me now also bring in Mayuresh Joshi, the fund manager of Angel Broking, to the conversation. Mayuresh, good morning. Your task is very tough at present. Markets are extremely tough in terms of stock movements. What's your own perception of the market, and what are you liking right now?
So morning, Piyush. I think the normal headwinds that the markets are facing, I think it's pretty clear and cognizant that crude prices, rupee depreciation is what we are probably looking at. With crude actually coming off a tad bit in 2 days trades, I think there is some amount of respite for the local markets, both in terms of the sustainability of these levels, and that itself is a determining factor in terms of how our fisc and current deficit will pan out. Having said that, again, I think the global headwinds still persist, but the kind of flows that still continue into the equity markets and the momentum that we've seen, whether you call that as a melt-up or the exuberance that you're probably still witnessing, I think is very, very evident. So I think you probably need to have some amount of rationale in terms of having a bottom-up approach. Probably look at stocks where valuations are not too stretched and where the earnings probability looks still pretty reasonable over the next 2 to 3 years. So again, I think selective banking stocks, select auto ancillary stocks, you're probably looking at certain stocks within the infrastructure space, including cement, and the consumption space at large. I think selective within FMCG, consumer staples, where the growth prospects probably look far better over the next 2 years.
Right, so that's the take coming from Mayuresh here. Mayuresh, Gaurav and Himen for all the insights, and that's the take at present. So that's the market. From markets now, let's talk about another interesting sector.